Well, good evening, all. Ira Epstein, and here we are with your futures market wrap-up. And this wrap-up is for the evening of Tuesday, the 23rd of April. And we're now sitting here at 2024 and the time just after 6:20 p.m. Central Time. The most interesting part of the day was Tesla at the end of the day. It's one of the reasons that you got the NASDAQ up. It missed on every single number. Not any number. Profitability didn't make it. Cars delivered don't look like they're making it. Margin per car profit just keeps collapsing as they keep cutting their prices. But Mr. Musk did come out and he makes these promises and he gets the markets all excited. And what he said was, we are working on our autonomous vehicle. We might have something ready at the end of this year, the beginning of next year. And no, contrary to the reports, we are still going to develop lower priced cars going after that important segment of the market. That's all the market had to hear. So you looked at the numbers and you would go, this thing's in trouble. Then you listen to him and the market goes the other way and goes up 11% or so. That's what you're dealing with. Now, keep in the back of your mind two parts about the gentleman, and this is just factual. Number one, well, there's three parts. Number one, he is a genius. Number two, in fact, there's more than this. He said that he's devoting almost all his time to Tesla, not to X, to Tesla. And remember, Tesla's got many businesses, it's just not cars. Number three, he rarely meets his timeline. Number four, he generally gets the product. Not always, but generally gets the product. But if you understand timelines and you're buying because of this timeline, I personally think that's not probably the wisest thing. I think it's great that we know that maybe there's a floor under the market at some point, but did he make the timeline in the Cybertruck? Where's the cheap car that we were going to have already? It's supposed to be rolling out any day now. So take everything in stride is my point. Do I bet on the man? Absolutely. Could the stock go lower? It could. But the market's not only looking at Tesla. The market looks at most of the markets in the stock indices, and we've had a series of good beats, all right? And that's the important thing. You're flat in the energy markets, not going much of anywhere. There's still pressure on the bonds and notes, and why? Well, tomorrow we're going to get, let me bring this up for you. In fact, you're going to get your advanced durable goods. They're coming out, and they're expected to double from the prior month. That's going to be important. So the March number is going to be supposedly double what February, but that's that consumer spending that we're getting, and durables are longer lasting goods. The earnings reports, they're going to keep coming in all week. We got 178 S&P 500 companies reporting this week. You think that's a lot, right? It is. So they move the market from one part of the sector to the other. Then you've got GDP coming out. That'll be out, I think, on Thursday, and PCE's right behind it. And that's the Fed's favorite index. So those are the numbers. They're going to set us up for everything this week. That's where you're at and everything. Good news is that it looks like let me get back to the charts here for us. It looks like I know that I can get this coming here. Let me get going. There we are. That the Senate appears to have crossed the hurdle. The monies for Ukraine, Israel, Taiwan are going to come. The TikTok ban, that looks like it's coming. It's all one bill, so everything was stitched together, and that should be wrapped up tonight, tomorrow, but it's right around the corner here. And then we're back on to election talk and other things that we do. All right. So let's go to the chart action and see what we have. As I told you and I expected, I thought we would break down to the 18-day average as this break was occurring and maybe find the support there. So far, that's exactly what the market has done. It speaks for itself. When you take a look at this chart, we've reached down and we're getting a bounce in the market. But that's not the beginning of a trend. You're nowhere near that from what I'm seeing. Higher high, lower low. That's not a trend. You're getting a bounce off a break so far. It bounced away from the 100-day average. The resistance, if it wants to go all the way up and get some good news, would be in the 51.65 level. There's a huge battle with some traders saying use this rally to lighten up because these markets have to deal with higher for longer rates, those that believe that the PCE is going to come in strong and you've really got to go through 2-3 reports. And the naysayers are saying, no, you're going to see all this stuff is weakening right now. And this was the break you got to buy and hold on to. Just watch CNBC, Bloomberg. You see all this unfolding right in front of you. The market, as you can see, bounced away here, but it rode that Bollinger Band all the way down. So it would take a move under this number right here, the 49.63 level, to open the door for a 4,800 zone number in the marketplace. Right now, that's far away. The resistance still looks to me more like the 18-day average, and you lost the bearish momentum, which gives me reason to think that there could be more of a rally in the market if the earnings keep coming out good. In the NASDAQ, the markets rallied up to the first resistance point, which used to be the support zone that I thought we'd hold, and we didn't, the 100-day average in green. The 18 is still falling towards it. Here, too, you have lost, for the moment at least, the bearish embedded reading, but you've hit your upside target. It's the closest main moving average. When we come to the mini Dow, when you lost the embedded reading right here, I was looking for a challenge of at least the 100-day average. We got it. And for good measure, today even went to the 18 and you sort of ran out of steam. You could just see the air coming out of it as this did it. It went shh. Russell, same argument. You're into the resistance zone right here. And again, a market that's gotten away from the oversold condition and correcting it. The word is correcting. It's not done. This number still has to leave get away from being under 30. In the 10-year notes, I'm still in the bear camp in this market, but with tonight's action, now follow me on it. You came in, you were still embedded, but with tonight's action, you're flirting with losing that reading. So you want to be ultra careful, not let this get away from you. The 5-year is more bearish than the 10. And why? Well, if the market's really betting on the downside, the shorter duration will do its job. Now, we had a 2-year note auction today of I think it was $69 billion, the largest ever done. And instead of it going to 5%, a lot of traders thought that that was going to be the case, that in order to sell that much, the largest auction ever of 2-year notes, that they would demand the buyers a higher premium and get over the 5% level. It went the other way, just the other. So it sold off in order to get them. They, in other words, paid a little more. They got a little less yield on the market. Okay, but it was still very well received. Rick Santelli gave it a B+. I was watching him, and I know Rick was all excited about 5% gain on CNBC. Didn't happen. We've got now the 5 and the 7 years right ahead of us. So there's big numbers yet to come this week. But that's what we're dealing with right here. At this moment, the bears still control the 5-year. In the dollar index, I know it looks just like a little bit. Got a close of 77.56. For the moment, you've lost the bearish embedded reading. The only time it can get it back is tomorrow. And after that, it's got to go through the whole rebuilding process. If it doesn't get it back, and right now you never bet it's going to get it right back. The odds favor a breakdown towards wherever the 18-day average is, and it's the flip-flop in the euro. So I have been bearish the euro, bullish the dollar. This isn't the time, okay? If you were wrong, I think you lost 20 points on each one, something like that. 25, it was right in that zone. Not a problem. Let the market finish its rally here. Again, I still think the fundamentals are there the way that I'm saying, unless the PCE and GDP, this report, surprise. And I can understand traders taking some money off the table in front of that. I was hoping they wouldn't, but they did. Okay. But if it's going to be higher for longer, you'll know that right away this week. So a lot of questions get answered this week. In the British pound, lost the bearish embedded reading. So today was the day where I think the pros took a shot at selling this rally, and by the day's close, they said, nope. Don't want to be in that anymore. And that's basically the way I was handling that market. Sell the hard rally. If it doesn't break back, out you go. And that's what I told my clients to do. When I say I am telling my clients. In micro Bitcoin, the market lower low, higher high, coming right back here to the 18-day average, very neutral. And as I said, I thought the halving would give the market a lift. It did, but it's really early. All right, you generally see the real impact of halving, 4 to 6 months after it takes place. We then get to the Brent versus the WTI crude. And as I said, I don't know if it's going to make it to this $5 level, but that's the support zone in the market. You can see that over the past 48 hours, you went down, challenged the Bollinger Bands, and you're getting a bounce, but you're not bullish in this market. It is still in the bear camp. The same thing is true of WTI? No. WTI has a higher high and lower low pattern. It's a bounce, but again, right off the Bollinger Band, right where I'd expect it to happen. And the same in the gasoline market. Lastly, look at nat gas. It's the May contract. I want to switch over to the June, but I want to be certain that we have the daily volume right. Could be going up to the upper band. I think that the market is trying to lay the foundation right here for either this is a major top and you're coming down again maybe into the 130s, or it's basing out for something higher down the road. It's not giving us a signal which way as I look at the charts, one way or the other. So you look at it right now and you say, okay, the first thing that's happening, trade opportunities are popping up everywhere. That's the good news. Are the risks big? They're not as big as they were a week ago. Nowhere near it from everything that I'm seeing on the chart. And so far that's coming to fruition just the way that I'm showing in the morning charts. That doesn't mean you win, but the risks are so small you keep taking them until the point where boom, boom, boom. You try to get a couple of trades that go your way and all of a sudden those losses don't matter because the winners take over. I cover all these markets for you. And I think you'll find it interesting if you follow because I mix between the daily and the weekly charts, trying to show you the reasons for the rationale of the trade, and that's all that anybody can do, trying to pick out what it is. This is about trading, not investing, so keep that in the back of your mind. IraEpstein.com. You go to the word when you get there. Research. Research is the word. You can move your cursor up here. There'll be an icon. IraEpstein.com, and I'm Ira, and I'll catch you in the morning.